All right, Ken Orange Theory Trader back with you with another video on the secret to managing 4 hour trades on the 4 hour candle. So let's not waste time and get right into it because we're only trading one candle and we're only trading 1 hour out of that candle. Now, how should an expansion candle look on an hour by hour basis to know we're on the right track? So this is just a brief guide that I put together to help you see if you're on the right track or not. So first off, shorts. What I do is this. I put together 5 trades and I tracked hours 2, 3, and 4 to let me know if they paid out, which means they just moved in my direction, or if they chopped, which means they pretty much were a doji on the 1 hour chart, or if they retraced, meaning they started in one way and ended against me, right? So I'm going to go through these and then we're going to compare this to the charts that I just put out. But let's just say you enter a trade at 9. The most important hour is hour 2, because as I track these successful candles, if you're not in profit in 1 hour, at the end of hour 2, you probably want to get out because that's not normal. This is typically normal. I know this is just 5 trades, but even if you did 100, at the end of the day, if you take a trade trading this method and you expect a real expansion candle and you're not in profit within an hour, there's something wrong there because, again, not normal. So let's take a look. Okay, so this is a candle. All of these are expansion candles. Obviously, these are finished products. So this is an example of a 1:20 a.m. candle. Okay, the entry was just a change of state of delivery. This is not a video about entries, but these lines here note the hour. So obviously, we don't track hour 1 because that's our trading hour. That's where this yellow box is. This is hour 2, where hour 2 started here and then price closed here. So that's down because I was short. So because hours 2, because it went down, that's a payout, right? You're in profit. Okay. Hour 3 from this to this went down. That's 1 hour. At the end of hour 3, so this hour 1, hour 2, hour 3 was straight profit. So you'll see if I go back to the chart, paid out, but then hour 4 ended in chop. Now that part of the screen is cut off, but at the same time, it just consolidated. All right. So, but I did make a note of that. So here we go. This is 9:20, a 9 o'clock a.m. 4 hour chart. This is the 5 minute, by the way, and this is broken out into 4 hours. 1, 2, 3, 4. So what did each hour do? Again, this is our trading window. So don't, we're speculating on hour 1, but hour 2, we need to start seeing some action. Now, it got a little scary because you got a big spike up here by the open price, but ultimately priced opened here and closed about here. So that's fine with me, right? Then hour 3 hour 3 paid out and hour 4 paid out as well because it opened here and closed down here. It wasn't a big payout, but ideally it did trend down. But again, from our entry, notice from the entry to the close of candle 2, we were in profit. So that tells me, okay, we're on the right track. If you see anything different by the end of hour 2, the point is you probably want to exit the trade. Okay. Next example here, 9:20 entry here. We got the, of course, fair value gaps serve as a confirmation as well. Hour 2 paid out handsomely. Hour 3 did as well. But hour 4, chop and retrace. You see it opened here and closed right about here. So it did close up from where it started. We don't like seeing that. So you could have, the best exit here would have been hour 3. Hour 4 would have been the wick on a 4 hour chart. So I hope that makes sense. Sometimes hour 4 can be hit or miss. So if we go back to our chart, I just make a note of it. Okay. Did it chop? Hour 4, it shows a lot of chop, retrace, chop. So obviously trading this method, you want to avoid a wick, because if a wick is going to form, the probability is more than likely to happen on the 4th hour of the 4 hour candle. Every candle doesn't end straight up in a straight line. Okay, is the point. Okay, so you are going to have wicks in there. Okay, and then another one here. Of course, hour 1 was our trade. Hour 2 paid out very well. Hours 3 and 4 just chopped and retraced. So hour 4 definitely would not have been worth holding, because as you can see here, it opened here, did a little dip, and it even formed a fair value gap against us. So we don't like seeing that, and went up. So the best exit in this case would have been hour 3 or even hour 2, because the distance between these lows and these lows aren't that much. And every now and then you'll get a good payout in 1 hour, where you enter first hour and second hour just gives you a strong move to the downside. The rest of this is really just chop. Notice how price opened here and closed right about here. So this was your best exit right here in hour 2. There will be times where it only takes 1 hour to get the best of the move. Okay. So Here's another example where you have your first hour of trading. The entry could have been right at the end of the hour's candle. Hour 2 opened here and closed right about here, so that was good. And then hour 3 paid out. Okay, and then hour 4 paid out as well. Okay, slight payout, but the best exit was really about here because from this low to this low wasn't that much. All right, so that was that. So what I did was I just compiled them into this chart to let me know, okay, when I see a successful chart, what did hour 2 do, 3 do, and 4 do? Obviously, they're all going to say pay out, pay out, pay out. That's like the dream, okay? But sometimes when you're checking a real chart, you can check the live chart against your own personalized chart to see where you're at. So here are some longs now that we understand that. Where I have the chart here, so I just toggle back and forth between the charts. So this was a bit of a unique one because this one, hour 1 really consolidated, but hour 2, notice it opened here and closed here, but we were long, all right? But then it spiked up right at the end. This is a rarity, to be honest with you. Most of the time, it won't do this now, but notice there is a little fair value gap right here. So I tried to stick to a 10 pip rule whereby I don't want to see 10 pip, the open price. I don't want to see price go 10 pips below the open. So any entry here, if you'd had a 10 pip stop loss, like below this fair value gap, it would have been fine. It would have been protected. So it would have been a little harrowing here. But again, at the close of the hour, bang, it was a straight rise. So if I go back to the chart, trade 1, hour 2 had a retrace. Okay, but at the same time, hour 3 and 4 paid out. Okay, so here goes trade 2, where we have hour 2 pay out, hour 3, bit of a retrace, and then hour 4, strong payout. So that's what I noted here. Payout, retrace, payout. So then, you just check it. Okay, first hour, okay, I'm in profit. Okay, third hour did retrace. Well, what are my odds of a payout? I compare it to this chart right here. Okay, where are we at? Are there any fair value gaps? You just compare what you're seeing on a live chart to what you're seeing on a screenshot that you may be building. So you would have to do this if you really wanted to measure and just see to make sure your trade is on the right track is the point of this. Let's see, for the next trade here, this was again a 1, 2, 3 to the low with a little bit of a spike there, and then you could have entered there. So this was the hour 1, but then hours 2, bit of a chop, hour 3, slight payout, and hour 4, slight payout. This is hideous price action right here in hour 3 and hour 2, to be honest with you. But again, if your entry was here and the hour closes and you're still in profit, that's not a sign to get out. The sign to really get out to me is these big spikes. Spike, 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 like that. Big spikes. I like seeing that. Again, here, once again, you have a big spike here, which creates a sizable fair value gap. Consolidation and big spikes again for hour 4. So this one would have been a decent hour 4 exit. Okay, but the whole time trade was in profit. And then here as well, entry anywhere below the open or around the open. Then, of course, hour 2 was a huge spike. Hour 2, the end of hour 2 would have been the best exit because hours 3 and hours 4 really just chopped around. Your best exit just would have been right here. But because why? These big spikes. Price movements like these, boom, 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 is unsustainable. You're not going to see a whole bunch of these candles back to back to back. So if you see price action like this in hour 2, you might want to take profit when the hour closes. But it is helpful to at least hold to the hour close and just measure and see where you are in terms of like a possible chart that you could put together like this. Okay, so once again, this first trade was a bit of an anomaly, as well as trade number 3. Let's take a look at that one real quick. That's 1, 2, 3, where this one was choppy. All right, but the entry was still in profit, so that's why you could have held on to this one. But this right here, this isn't an exit signal. Your exit signal, if you're right, is again these big spikes. As far as the short side goes, big spikes like this, boom, 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 like that. I mean, the rest of the day was just spinning consolidation. Here again, boom, 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 these big spikes. So you'll see fair value gaps being created as well. Might be time to get out. So if hour 2 is giving you these big movements, you might want to go ahead and get out. But if it's slow and steady, like say this, see there's no fair value gaps here except for this one. The big spikes really don't come until hour 3 in this example. Boom, 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 fair value gap, and another one right there. Okay, but hour 2, this isn't the time to exit right here. You're going to have to wait to see some momentum if you're right. All right. And then here, this was just a slow, steady. You got some fair value gaps, but the big moves didn't come until hour 3 right here. Boom, boom, boom. So, you look at that. You can also note to see if you want to just be real detailed with it. add to your chart as well. Were there any fair value gaps created in the hour? If so, how many? You do that because fair value gaps are the main confirmation to let you know there's momentum in the trade. If there's no fair value gaps, like this one here, there's just the one. That's not very good. But if you see multiple ones, like so you got this one here and this one here, like 2 fair value gaps in an hour, can be a good sign. So that could be something else that you can see. Look at this: 2 fair value gaps in an hour, great sign. 2 fair value gaps in an hour, great sign. 1 fair value gap in an hour, great sign. 2 fair value gaps, great sign. Another fair value gap, great sign. Okay, in your direction. See, there's 2 fair value gaps. So what did price do? Kept rising. Okay, momentum. That's what you're looking for. You want this trade to show momentum. You want the candle to show momentum. So that's the point. So that's all the charts that I have here. But again, these charts here, if you just track it hour by hour, your first hour is just your trading, and then when the hour closes, where is it at? Hour 3, where you at? And then hour 4, you need to start looking for an exit. Okay, ideally. Okay, because again, we're only trading the 4-hour chart. So I hope that helps you. If you have any questions about that, definitely leave it in the description, or leave it in the comments rather. And thanks for watching. Appreciate you guys for all the time and attention, and have a great rest of your day. Take care.